eMudhra came out with its quarterly earnings, and if you look at the profit as well as the total income has seen a very healthy uptick on a year-on-year basis. The PAT has seen an uptick of about 46%, coming in at around 15.8 crore rupees. If you look at the EBITDA margin, however, on a year-on-year basis, there is some sort of a small decline. 32.8% is the EBITDA margin for the year, for the quarter gone by, versus 40.6% on a year-on-year basis. You've seen a healthy uptick, however, in the EBITDA levels as well, 26 crore rupees versus 18.5 crore rupees. Let me bring on board the management of eMudhra. We have Mr. Venkatraman Srinivasan, who is the Executive Chairman and eMudhra, joining us on the show. A very good morning to you, sir. Thank you so much for joining us on ET now and to talk about the quarter gone by as well as the road ahead for your particular company. If you look at the margins, yes, in Q4 on a year-on-year basis, we definitely have seen a decline in your margin levels. But if you look at the full year basis, on an FY23 basis, your margins have been able to sustain versus FY22. Could you talk to us what exactly took place in your margins? What is a normalized level that you expect for the margins going ahead, and what would be the key drivers for it?
Yeah, the margin depends on predominantly we are in the cyber security and digital transformation business. And there are 2-3 elements to it. One element is the trust services business, where we issue the digital certificates and to some extent the tokens. And the second is the enterprise solution business, where we sell the software and also wherever required some hardware, the cryptographic modules and all that we supply, HSM and like that. So the margin depends on the component of software versus hardware. So a little bit when the hardware increases, then the margin little bit comes down. And then as we move from almost from 130 crore, we move to 180 crore, from 180 crore to almost 250 crore. When we are going like this, we have to take more and more of system integration, more larger projects. In the larger projects, the component of hardware is also slightly higher. So that's where little bit it is going down, but it is not going down very high. And one more factor in the margin is as we are expanding globally. For example, if you take this year, our international growth has been almost maybe 80 to 90% growth internationally, compared to domestic growth may be lower. So we need to appoint a number of people abroad. So we have created a branch in Saudi Arabia, a branch in Qatar. We are creating a subsidiary company in Kenya. Then we have appointed few people in the USA and all that. So these are all in those international jurisdictions. The cost of people are also higher. So all these lead to some slight reduction in margin, but that's also compensated well by the increase in top line. And we feel that the currently for the year as a whole, our PAT margin has been 24%. So we feel that maybe around 24% to 22 to 24% margin can easily be maintained, in spite of, though our top line growth will be good because we are going more into international market where we need to employ little costlier people. Still this level of margin can be maintained. That's what we feel.
Hi, very good morning, Mr. Srinivasan. This is Shrishti joining in. Talk to us about your exposure of your revenue from the global clients. What is your revenue from the global clients versus the domestic clients? And adding to that, are you seeing a tempered slowdown in the global orders?
No, global order for us, it is not slowing down. For example, last year we had our global international growth was more than 80% compared to domestic growth in the enterprise business of about 58%, and in the trust services business domestically, there was almost no growth. So that way global growth is good. We are in a very niche area of business, which is the cyber security and digital transformation, which is the need of the hour. Cyber security definitely need of the hour, and more orders are coming. And the paperless transformation, again, it's a cost reduction program. So for saving cost and for customer convenience, it needs to be done. So from that perspective, it is really growing well for us.
Could you talk to us about the new products that are in the pipeline? Also, if you could share with us some of the timelines that we can expect for them to go live. And I know you did touch upon your FY24 revenue, but if you could reiterate it for the benefit of the viewers.
Yeah, first I'll talk about the new product. So as part of our IPO, we conceptualized 3 new products. One is the certificate lifecycle management, which is eMudhra. Then the remote signing product, then the IoT product. The certificate lifecycle management, there is a global need for it, and so we first started doing that. So that product is completed, and we have got a very big customer in India. One of the largest banks in India has become our first customer for the product, and there is also a lot of demand from other public sector banks as well as private sector banks, because there is a new guideline from the Reserve Bank on this certificate discovery product. Then the second product is the remote signing. The remote signing product also beta version we have already implemented, and lot of customers, almost 15-20 customers, are now signing through our remote signing software. So still little bit it has to be refined more, which will be done maybe in another 2 to 3 months time. And the third is the IoT certificate. In the IoT certificate also the product is the development is going on, and mostly before September that product also will be implemented. And then with more and more smart cities coming in India, and also more and more the connected vehicle, electric vehicle, connected infrastructure, everything is having the certificate, digital certificate. The demand for the IoT product also will increase. So this is where it is. Then coming to the next year, what we are hoping, though I would not say it's a guideline, we are definitely, and though our base has also considerably increased over the last 2 years, I am very hopeful of at least maybe doing around 25 to 30% growth in the coming year.
Mr. Srinivasan, our last question to you. What are the key people challenges you have faced over the last 2 years, and what are you seeing on ground now?
The people challenges, one is the senior most level and the mid level. The senior and mid level, we are very stable. So almost all the people who are in the senior mid level are staying with us, and they have got good stock options also. So, but in the lower level, the challenge is very high. So the people are joining and leaving and all that. And the last year, if you see I think the employee turnover may be almost 30% or little more at the lower level. But because the senior mid-level is very stable and very good training program, we are able to overcome the challenges of the junior people leaving and then joining and all that. So we have a number of training programs by which quickly we can impart the knowledge and then go ahead with inducting the people.
All right, we leave it there then, Mr. Srinivasan. Thank you so much for joining us on ET Now to talk about the quarter gone by for eMudhra. Also, what was the road ahead coming in for your company? And that was Mr. Venkatraman Srinivasan, who is the Executive Chairman at eMudhra. But on that note, we'll actually slip into a break on this edition of Buy Now, Sell Now. When we